I'm more bullish on crypto than I've ever been historically. The world is going to go full autonomous, where agents do the majority of what you need to do online.
Adeniyi Abiodun, co-founder and chief product officer of Miston Labs. He led Facebook's Libra project. Now he's building SUI, billions of AI agents, 3 billion new wallets, and crypto's biggest moment yet.
When you have 4 billion people that need to transact on a regular basis, and then you multiply that by 10 agents, right? Can you make it free at that level? The real meta is who can move money on the internet faster, cheaper, better than anybody else. I believe in a world where...
Quick note before we continue. 85% of the people that are watching our episodes are not subscribed. But if you do enjoy the conversations with the smartest people in macro, finance and crypto, make sure to subscribe to this channel because it helps us a lot. Now, let's continue with the conversation. Welcome to the show. It's a pleasure to have you on. And I need to ask the first question because we need to tackle why there is such a big gap between what is fundamentally being built in the ecosystem right now and why everyone hates crypto. What's taking place from your perspective?
You know, crypto's been around with us for a very long time, right? Crypto started with Bitcoin to a large extent. Well, some can argue Hashcash and other protocols before it. I've been involved in crypto since 2012, was working, building my own Bitcoin mining company, all the way to working at Facebook to launch Libra, and then now Decentralized Labs. Crypto's promised a lot, from the early ideology of offering money that is not encumbered by central authorities to now where we're thinking of it more as infrastructure that's going to really liberate how money is moved across the world. Crypto's taken a long time to reach its full potential. And I think with the advent of what's going on with AI agentic payments and commerce, and now with regulation and legislation around making it easy for people to issue stable coins and the rules around what is a decentralized platform versus what is not, you're going to start to see more of. I think crypto is going to have this moment where you start to have a lot of these things that were promised now become reality. Before, it's it was a wild west for quite a while, right? I think we've seen the crazes of many things launching without much value or much utility. We're now the world where the rubber needs to hit the road, right? Where you have stablecoins becoming the meta of the day, and developers building payments without the previous rails that used to exist, like the credit cards. Paying for agentic workflows doesn't make much sense, but blockchains that could do that at scale absolutely do. So I think we're going to see that magic moment where crypto starts to really shine and show itself, really start to prove the thesis.
In terms of I've been in the space since 2017, and in terms of the magnitude of fundamental growth that we're currently seeing, I often reflected to the period of 2016, 2017, where we started to develop smart contracts and we were able to start building an ecosystem. In all honesty, in between, there's been a lot of trial and error, but no breakthrough has been built.
Yeah.
How do you see that?
So a lot of trial and error to the good, right? Like, great interesting thing about crypto is people practice or try things out in production, which is also, a potential for catastrophe at the same time. So I'd argue there has been some innovations, right? Like if you think about Ethereum, right? Ethereum gave us, to a large extent, smart contracts that we could all use and play with. Because of bandwidth restrictions on Ethereum, the fact that it's quite slow, people came up with mathematical models to represent order books. So AMMs or CLAMMs became the meta of the day, and it's an interesting way to actually allow people to trade even when you have very, very low performing chains. So people have really hacked their ways around infrastructure limitations. You've had DeFi, you've had lending, and in a world where if you even look at the Hyperliquids of the world, right, like you're now seeing Hyperliquid compete with the likes of centralized entities for perps volume. So it's failed to deliver at scale previously, largely because the rules around it have largely rules are always behind the innovation, right? Like you never build rules ahead of the innovations that occur. But I believe you will start to see that now, right? Hyperliquid competing with centralized exchange being one, deep book on SUI, being able to perform as fast as a lot of centralized exchanges already and giving as tight spreads as centralized exchanges for margin is also being one as well. And I believe as well, like lending pools, look at what Aave has done from a lending perspective. They're one of the largest lenders in the world at this point in time. So you start to see DeFi protocols compete with banking institutions. You start to see trading engines running on blockchains compete with traditional centralized institutions. I believe also, if you don't have the rules that make it clear where you can or can't innovate, it's hard for capital to flow in and make the right decisions about, whether this is a safe bet versus not.
So many questions in that regard. First thing is like, it's between 2017 and between now, I've been building multiple ventures, and every market cycle, things become more professional, and the previous cycle, all the things that were built back then, make no sense anymore.
Yeah.
From your perspective, you've been building something within Meta and now within SUI, but even within SUI, you're handling multiple cycles now. How do
Yeah.
you like keep pushing forward and like keep continuing to innovate in some way?
I think we were very lucky in the sense of we weren't the first. So what I mean by that is we had a lot to learn from what the Solanas, what the Ethereums, what the AVAXs of the world had done. And we had a higher charter. I mean, our charter at Meta was, can we build a rail that makes it easy to send money on internet, as easy as it is to send a message, right? We had this amazing communication revolution where previously sending messages on internet was, well, sending messages periods used to cost money, right? SMS messaging used to bill per text or whatever. Then they started bundling things together. But yeah, the internet, we got internet clans, and now Facebook of the world started making it free to build communities on the internet and sending messages and creating contextual groups online. And then commerce really changed as a result of that, as a result of that, right? So Facebook saw an opportunity where if we can do the same thing we did for messaging, but for money, we can allow another revolution of commerce to happen, especially on the Facebook platform. Now, while we're Meta, we didn't get the opportunity to have Libra launch. We were the team that was leading a lot of our R&D and the engineering work that led to Meta launching Libra. So we saw an opportunity to exit Facebook and really continue that charter outside walls of Meta, right? So what we did is we're already looking to launch a Libra version 2.0, and the goal of Libra version 2.0 was to precisely make it easy for anybody who had a phone to pick up the phone, send or receive money as simply as sending a text message without removing the wallet as well. So that's what we built with SUI, right? SUI started with a broad vision of, if we had to bring on 4 to 5 billion people on the internet today to do commerce and to do payments, what is the gap from what we have in infrastructure today, and what do we need to build towards? So we started with that vision. So we're not really clouded by the multiple cycles that crypto has, where we think, what is the meta for this cycle? And let's jump on it in interim to make sure we capture as much noise as possible. But really, we're thinking, where does the world need to be from a payments perspective? Who needs to be served in that world? What needs to be disintermediated to make it possible? And then we build towards that. This is why SUI, when we build SUI doesn't have the concept of a max throughput. SUI has infinite throughput because you can add more machines and it scales. SUI is the lowest latency for trading. So if you want to move money on SUI, the latency is lowest in every other blockchain in the world. SUI doesn't gives you ability to of like building smart contracts that are safer than traditional programming languages. Because when we had to have David Marcus in front of Congress talking about why Facebook is launching a platform, we can't honestly sit in front of the US government and explaining why it's safe without having a real model for modeling what safety really looks like. So there's a lot of over engineering we've done, but because we need to power the future of payments, not because we're trying to tailor for just what crypto is today.
Yeah, I think to get to your point, I think the vision can always stand through the cycles, but during the cycles, the competition and the way how you get there is completely changing. Like if I go back to 2020, 21, everybody tried to become an ETH killer or like build another layer 1. Then all of a sudden all layer 2s have been built. And now you see all layer 1s trying to become a niche and then become interoperable where everybody communicates with each other independent of which chain you are. what are the main challenges right now for the crypto ecosystem to continue to grow?
So, in our view, we believe that majority of transactions you do on the internet are going to be governed by agents, right? You can even see that in the ad business, right? Like bots and everything handle majority of internet traffic already, and what you do online, in our view, is going to be proxied by a number of agents. You yourself probably own 4 or 5 agents that do your bidding on a regular basis, and in that world, I believe there's a report from Stripe recently that said you're going to need 1 billion transactions per second to really cover the agentic world. Crypto has always operated historically under this premise of um, of uh, limited or finite resources, right? You build infrastructure and you say, okay, well, because of technical restrictions, we are going to have to put pricing in place to cover a scenario where a business is successful to make sure the chain doesn't go down. And what I mean by that is surge pricing, just like Uber today. If you're using Uber at SFO and you unfortunate to land at a point where there is traffic, you're going to pay a surge price for getting home. The same thing happens with blockchains today. You are doing nothing related to everybody else. You're simply trying to move money to your friend. But because someone is trading meme coins on some DEX, you have to pay a higher price to just move money that's got nothing to do with meme coins. So that world where things are built on scarcity does not work in the real world. Like, it's not how the real world works. Like, Google does not decide to charge you search pricing because there are more websites being used on the internet, right? Google operates under a model of, if we want to support more people, we need to buy more infrastructure, and our infrastructure needs to scale accordingly to that. I think crypto has done a great job for dealing with a niche audience, but it's not geared up really well to deal with a mass market. And this is where, we come in. And this is certainly what I think the folks at Solana have been trying very, very well to do as well, thinking of the future and building for a future where scale is absolutely going to be paramount. So if I had to go back to the question, right, like, is crypto really ready? Like, I think crypto of the past isn't. But I think if you look at the players now who are very focused on scale, who are very focused and come with the pedigree of what Google and Facebook build, we're the only team in that world that has really come with that background. We built search at Google. We built all the stuff that the infrastructure at Facebook. Like, our pedigree and our background is really come from a world where you start with scale first, right? We never build with 1 million or 5,000 people in mind. We always build with the billions of people in mind. And I think for crypto to do really well, you need that pedigree to jump into crypto to start to solve the real scale issues that crypto is going to be plagued with very, very soon. Stablecoins are an example of that. And this year, we're going to be launching free payments on SUI. So anybody can download a payment SDK and start sending money, agentic payments on chain for free, no restrictions, no limitations at all. For you to do that at scale takes a different type of engineering. You don't just offer it for free and you take your chain down. You have to have built the ability to abundantly add more resources to scale to demand for that world to exist. So that engineering decision we made very early on in the project is going to pay off.
Is that also a complete shift of Web3 protocols building something for Web3 in the echo chamber and now trying to solve a problem in the Web2 world, the normal world, and therefore getting them into the Web3 ecosystem? Is it like the other way around?
Yeah, I would liken it to, if you look at what was Facebook trying to do with Libra, Facebook wanted to serve the Web2 world, right? Facebook was not really thinking about Web3 at all. At all, in any shape or form, right? Like, they're trying to launch a global platform and a stablecoin to make it easy for the likes of Stripe, PayPal to move money and when traditional rails that exist like Visa and MasterCard, or even the Swift and Chaps payment systems, right? They saw that there's a friction. Most fintechs exist today because that friction exists. And once you remove that friction, fintechs are going to disappear. Many of them can no longer monetize that friction that exists, right? So we have always wanted to serve a purely Web2 world, but Web3 is amazing because Web3 is where a lot of these financial innovations actually occur, right? As I mentioned, DeFi is going to power is going to replace a lot of what we do with TradFi, but it's, you've got a world where people are doing a lot of R&D and testing in production with Web3, and then you have the big players who are going to need to come into the space to leverage infrastructure. And if infrastructure isn't there, Stripe launching Tempo is a big example of that. They want to launch something that scales, that services their customers, but Stripe's competitors are not going to use Stripe's rail, right? To a large extent, right? So there needs to be this public infrastructure that everybody is willing to use, and we're building towards that. So I would say Web3 has been great at building stuff for Web3 users, right? But the user experience does not match what Web2 absolutely needs. The idea of wallets, I think, is a bad idea. People should not have to use wallets to send money. The idea of gas is nonsensical because users don't have to pay gas today. The idea of like paying a surge price because someone is doing something unrelated to you sending your money to your friends and family in a remote country because you're doing remittance because you're trying to support your family and you're now having to pay 10x the fee doesn't make sense. So the UX is really poor for Web3, but the infrastructure has been lacking, and these are the problems I think some of the leading layer ones are thinking about a lot more consciously.
Before we continue with this episode, I would like to show you something really cool, which is that our partner OKX has announced the OKX card, which is a digital card which is fully into your account on OKX, where you can just use it for any buys that you do if it is connected to MasterCard. So it can be your groceries, it can be flight tickets, anything you want. And the cool fact is you can actually get up to 20% in cashback until the last day of this month. After that, you're going to get 4% in cashback. But everything you buy through the app this month, you will receive up to 20% in cashback. And then on top of that, you're also going to get up to 100 euros in Bitcoin. Find the link in the description below and sign up today. Now, let's get back to the episode. In that light, I just had a sort of small thinking going back to the big discussion that Santiago and Hosseep had on how to value a layer one. And then Hosseep basically said, well, you need to look at Ethereum, for instance, or say whatever layer one you want to do, as a sort of city like Singapore. And then Santiago said, well, you need to look at a layer one where it generates revenue. Where do you stand on that debate?
So our debate is kind of technical. The value of a layer one is going to be directionally proportional to the amount of valuable state you can reach atomically at any given time. And let me break that down, what that means.
Sure,
right?
yeah, that's probably needed, yeah.
So, we talk about atomicity as though it's something that's a given, right? So what is the point of having a blockchain? The point of having a blockchain is that we all have a global engine that we can use to compute state, right? It's there because we can, and what I mean by state is it could be a balance, it could be an NFT, it could be money, it could be whatever, right? But the fact that this data is available for everybody and we can process it on the same machine, although it's largely distributed, we could do that together, is highly valuable. Now, if I have to start breaking up state across different ecosystems, then we start to lose the value, right? Like, this is why if you look at cloud, right? Like if I do things on Google, it's great to do things on Google because I'm in the Google ecosystem. It's very low friction to do things in the Google ecosystem. But when I want to start plugging things outside the Google ecosystem to Amazon, to other ecosystems, it becomes painful, right? So Google is valuable because the amount of value it gives you within this ecosystem starts to grow over time. And I think if you look at layer ones in the same way, Ethereum is valuable because of the amount of state it has. The value of that state is increasing on a regular basis. And the more computation it can do within the Ethereum ecosystem, as that grows, the more value the Ethereum ecosystem is going to be. Now, that is great when you have a low number of active users, right? And also you have, you have the majority of the world not leveraging it at this point in time. So I always say crypto suffers from a bloat in metrics. The amount of users in crypto is embarrassingly low. The amount of embarrassingly low. The amount of developers in Web3 is also laughingly low. 30,000 developers versus 9 to 15 million web developers, right? Like we're not even at the beginning of the game when we talk about comparisons, right? From Web 2 and Web 3. So if you look at where we need to be long term, I think that metric still holds. The amount of value that your chain is able to gather for itself will be the amount of atomic state you can generate at any given time. And you need scale for that. If you look at what the likes of AVAX tries to do, they try to build these multitude of islands, separated islands. There's no longer atomic. If I want to compute something here, but because it doesn't scale, it needs you to go to another chain to then access another asset. The the atomicity is gone. Like you can't do anything in a single transaction anymore. You need to now wait for that chain to catch up, and you've lost that element. Like you now become, an island of multiple chains that no longer has atomicity. Whereas if you have a scalable chain, Solana is built and scale, SUI is built and scale, right? SUI, of course, we started with the idea of having a single world where you can keep adding more machines, but it's still computed in a single world. We think we win because we've built it in a world where billions of users can use a chain at the same time. So if billions of users have to say, oh, well, I can't send you money because the chain is full, I need to send it to another chain and then wait for you to tell me if you receive the balance. That is going back to the same broken world we have today. So scale matters in that world. So I agree with them from a network effects perspective, but I think if you don't look at it from the vantage point of state or data and scale, it's lost, right? You can look at it from where we are today, but when you start to have Amazon online, PayPal online, full users online, Walmart online, right? We start to have the likes of Venmo, X, you name it. You have all these amazing apps and ecosystems who need to send value across the chain on a daily basis. You cannot have a multitude of worlds to make that happen. It all needs to be atomic. So that's hopefully that made sense.
It does, yeah, it does. I don't like. It's completely clear that if you want to build something on the new internet or the new Web3 and transact value, you need something that is able to, well, 1 billion transactions per second or whatever, at least at scale. And that's why you see all the protocols being built on top of whatever, SUI, Sol, Ethereum. They could pick whatever they want. How do you see Bitcoin then? Because Bitcoin is some sort of different decentralized island, and we try to build a layer 2 on top of it, but it doesn't really work because it's completely decentralized.
Yeah. Bitcoin is great as a value store. It's terrible as a payment system, and it should never have been, labeled as a payment system. I was involved in Bitcoin in 2012. I got the solution with crypto for quite a while, number of years. I went to enterprise to build infrastructure and came back to crypto. And the reason why is I didn't accept Bitcoin for what it was, right? Like Bitcoin is forever going to be slow. It was never meant to be fast, right? And it does the job. It does its job really, really well, right? It's never been down. It's high. It allows you to move large swaths of money. It costs money to move money, but you can move billions of dollars at a click of a button. But that's what it is. So I think we can't compare Bitcoin to other protocols because other protocols aren't money in themselves. Other protocols are effectively trying to be a computation layer for serious value. Now, what we're doing this year, when I say we were talking about the SUI ecosystem, we're launching something called Hashi, and Hashi is going to be the first fully decentralized protocol, institutional protocol that lets you effectively generate yield from Bitcoin without leaving the Bitcoin network. There's a lot of, I mean, there are trillions of dollars available in Bitcoin, and many institutions who are either sitting in DATs or, the Sailors of the world are going to be leading ways to generate yield off that Bitcoin, borrowing off that Bitcoin without trusting centralized entities. If you look at when we had, the crashes of the world, right, where, the BlockFis went bankrupt, DeFi was safe, actually. It was actually CeFi that had problems, right? Sustainable problems. So we are launching a fully decentralized protocol that effectively lets you generate Bitcoin-based yields and Bitcoin-based bonds directly on-chain without leaving the Bitcoin ecosystem and start to earn yield and generate yield off that directly. So I think Bitcoin will benefit because other ecosystems plug in and generate and give value to users in the Bitcoin ecosystem. I don't think Bitcoin would ever be a payment network. I do believe certainly, layer 2s or leveraging other rails to send money quickly with Bitcoin is the way to go for if you want to move BTC as fast as possible, not worry about the spikes in prices. You're going to need ways to do that. But BTC is not going to be fast anytime soon.
Well, you see with near intense, for instance, that it's going to be transacted to all the chains in a very fast manner. You don't need to go click 50 buttons and wait hours before it gets there.
Yeah.
That's a great progress, I guess. But when it comes to those yield products, with the new protocol that's being launched within SUI, where does the yield come from? How does this work?
Yeah, there are a number of things, right? So number one, we're going to be announcing the launch of Hashi very soon with a number of, the most prominent institutions who are holding BTC. I can't go into details but now, unfortunately. But they have a lot of Bitcoin, and they need to borrow from that Bitcoin, right? And they're always worried about counterparty risk, right? So what they can leverage Hashi for is to effectively um, place Bitcoin, put their Bitcoin, and generate a bond instrument, or at least generate RFQ where a lender is willing to borrow against your Bitcoin and pay you a yield. So there's actually a market. There's lending protocols that would take your Bitcoin and generate a yield off it. Also, we announced yesterday USD or SUI dollar, right? SUI dollar is a native yield generating stablecoin that itself pays yield back to the SUI ecosystem. So you can have a world where you can borrow against your Bitcoin dollars that actually earn a yield, thus reducing your cost of borrowing. So people want to borrow against a BTC. People want to effectively generate yield off an asset that is lying there dormant. Hashi lets you do that fully decentralized without any counterparties directly. It's using smart contracts that are formally verified on chain without having to trust centralized entities for that.
I think you mentioned earlier in one of your answers that there are so many developers in the Web2 world, like between 9 to 50 million, and then there are like a few 10,000s in Web3.
Yeah,
But then we have AI.
correct.
So how big of an impact can that have on the progress for crypto, and how big of a threat it actually can be too?
So I don't see it as a threat. I think it's a great opportunity, right? If you think about it, there's a barrier to enter crypto, namely someone had to learn a language, they had to learn infrastructure. There's a lot that is taken and a lot of cost to educate developers to get into crypto. I think we looked at it even for SUI, right? You compare it to, if you had to compare it to Sol or EVM, developers in SUI are learning SUI in 3 to 4 days, whereas in EVM and other worlds, it's taken about a year to become really cognizant of the platform. So the learning gap, we've sped up the learning gap significantly, but even then, that's still not enough. Because every Tom, Dick, and Harry, sorry, pardon my UK phraseology here, but every Tom, Dick, and Harry can be a developer today, right? They pick up Claude, they launch Claude Code, they can start building apps right now. My son, for example, built a tool to start learning algebra on his own, right? And he doesn't code. My wife is building her own apps and launching her own agents, right? Like they don't code. So anybody can build apps. The world of personalized app building is largely here. And I wonder what happens in universities in 2 to 3 years' time when you make computer science for. But I digress, right? But it's an opportunity in the sense of it offers, there are going to be that 50 million developers is going to, I don't even know what metric to use for how it significantly increases. Is it 10x? Is it 100x? I don't know. But it's going to be a huge freaking number to what we have today. And that's also going to be an opportunity for crypto, because rather than perusing docs and trying to learn code using docs or examples, AI already knows how to leverage systems by tools, and everybody can build on chain with the ease that's possible. So I think you've got to start looking at who are the developers for your chain. They're not going to be the traditional developers that you were trying to win before. It's going to be everybody. The question is now going to be, what value do you offer to those developers? And I always make this point. Autonomous agents need to do deals with autonomous agents, right? Secondly, autonomous agents, if they're smart, because they're supposed to be, would choose the path of least resistance or the most optimal path to get a job done for users. What I mean by that is, if you're thinking about making payments, you're going to look for the cheapest option to get that payment done. And we think SUI will be the cheapest rail, because moving money on SUI will be free, and it will never going to charge you for surge pricing because the network can handle the demand and scale. Secondly, it's also, you can't do deals with, like, as an autonomous agent, you're going to do a long-term deal with AWS, right? So we have storage in Walrus, right? In a world where agents are going to need ways of storing memory and sharing memory, we're building a tool for that directly using Walrus. So Walrus is going to be this storage layer, a highly robust storage layer in the agentic world. So we think the world is going to go full autonomous, where agents do the majority of what you need to do online. The element of users owning their own data is going to absolutely matter in that world. You're not going to or your thoughts and what you've done to Anthropic or to OpenAI or whatever. You're going to want an element of that. And you're going to also, the element of you also giving away your private key and API keys and email addresses to agents only to get robbed and scammed can't happen. So we have an infrastructure called Nautilus and Seal, which are fully decentralized infrastructures that let you effectively use your agent, but never have to divulge your API keys or privacy or secret information to those agents at the same time. So in a world where we go fully autonomous, what we're trying to do is ensure that we're offering significant value for those who are building an agentic world with our infrastructure. And we're building tools to make it easy for agents or large language models to understand SUI or the SUI stack to build on top of that as well.
Is there a fear that if AI develops the way it is currently, like 3 or 4 months ago, I think people were barely touching up on ChatGPT 1.0. And currently within our companies, we have a liquid fund and stuff. We actually build high FT strategies that do thousands of trades per hour just by vibe coding. I've never been a coder, but I'm now a coder because I can use AI, and I still know the methodology behind the way he's coding and the strategy to actually improve it on a constant basis. And indeed, as you said, we can improve faster because we can see the learning curve, we can see the test that it's doing. But then if you look at that perspective, there can also be a risk that if AI develops the way it is, that at some point it might build something completely different that is better than SUI, that is better than Solana, that's better than Ethereum, because we weren't able to actually produce that as we are not able to iterate so much. Is that a risk or like...
Yeah, absolutely is a risk, right? But again, I believe in a world where, what is the ultimate goal? The goal is to remove as much friction from the world as possible, to reduce cost to as close to zero as possible, and to offer value to consumers. So I still think a product mind is there. As long as AI is being utilized for those reasons, we can get better results. Our goal is always to be aligned with what the outcomes consumers and users need. And now our users are going to be AI agents, right? So we're here to serve those agents. We're always going to provide the most flexible, the most scalable, the cheapest platform for people to do deals on. And I think from that, I think we were certainly ways ahead of the competition in that regard. But is there a world where AI agents come up with a new decentralized network, new decentralized money? The idea behind money is a mind and people. So I believe that the human element is always going to be a part to play in decision making. I don't believe in this doomsday that people call. Like everyone's expecting, when you realize how LLM works, people kind of think like AI agents are some of these self-thinking, ideating things that operate without human input. Unfortunately, that's not the case, right?
Yeah, I mean, it's just a huge database that is produced from everything that's been put online.
Yeah, it's a mathematical aggregation of human thought, right?
Yeah, and just like a game theory in advance, or like making chances and calculating chances and probabilities out of all the options that are there, and then just providing you the best option possible.
Correct. It's effectively made knowledge available to all at very low cost, right? Which is in high cost. Now it's very low cost. So I think it's a net benefit. I don't know. Now, again, as I said, what happens in universities the next 2 to 3 years, I have no idea.
I have no idea either. I've been talking to someone last week that studies AI, and I've just been asking him, like, what do you study? And he says, yeah, it's all like, it's actually more or less mathematics and game theory, and not really like how to prompt and stuff. But I can for sure say that if people are good at that, they will have a very good career. I mean, the amount of productivity is just going through the roof. If we look at AI and AI agents, and I've been diving into Near quite a lot because I think that the protocol is doing some really good stuff as well.
Yeah.
You mentioned stablecoins or payments are going to be free on SUI. I wanted to touch upon that because within crypto, it's near to free. But then if it is free, there's a reduction of 100%. But also in the Web2 ecosystem or in the Web2 world, if you are paying with credit cards, or if you just pay in euros at the store, there's an enormous amount of transaction fees involved.
Yeah.
Why is it relevant that it goes to zero? And who are you targeting to actually use SUI with stablecoins?
Yeah, I mean, to clarify, you said that it's close to free in crypto. My argument would be it's actually only close to free when the demand is low, right?
That's actually fair. Yeah.
Yeah. So when you have very low throughput, like who cares? 1,000 to 15,000, 20,000 TPS is nothing. That's like who cares, right? You're free in that range. But when you have 4 billion people that need to transact on a regular basis, and then you multiply that by 10 agents, right? Can you make it free at that level? We already know, right? If you look at Sol, right? Like when we have gas spikes in Sol, price can go up, or you just can't submit transactions, right? You've had that with ETH, right? You the cost of gas can go significantly higher. Bitcoin does the same. So we're very good in crypto in offering low costs when there's low volume and low demand. Now, what happens when there's high demand? Can you keep those costs free? So it goes to the question, who are we targeting? We're targeting all agents that need to transact online, and to do that at parallel, we're targeting all manner of consumer applications that are going to need to submit transactions on the internet at scale. So we are trying to eat the internet of transactions rather than focus on the crypto native agents that exist today, right? Even if I look at all the agentic payments on the internet today, I'm sorry to say most X402 payments that you see are all botted. It's all fake. It's not real transactions. The real agentic payments aren't happening yet. It's all real right now. It's gained to make it look like real volume. But in a world where you have real users coming online, doing transactions at high speed, there's only the infrastructure we built that's really scaled to do that, right? Like we don't talk about max throughput. We don't talk about anything of that nature. And what does it mean for Sui? Like, if we're going to make moving money for free, then how is Sui going to make money? Well, I will put it back. It's the other way around, right? We need to make payments free on Sui so we can drive as much volume on chain as possible, because the value is going to be in the highly complicated smart contracts, not in the commoditized element of moving money. And it's the right thing to do. Moving money, you should be charging users to move their money. Now, when you want to use more high-level, complicated primitives, right? If you think about how Amazon worked, right? Amazon made it free for developers to build. You build a highly valuable ecosystem, and over time, people paid for more high-valued things. Similar with search. Search is free, but Google monetizes in different ways. Sui would also be in a similar form. Sui will be free for moving money, but it would make significant capital off a number of things. It's going to make money off, high value smart contracts that require gas payments. It's also going to make money off stablecoin flows. So the fact that there's a $3 stablecoin on chain that accrues value directly to the SUI token, that has never been done before. So the more balance we have in the SUI dollar, the more of that revenue, that stable coin revenue, goes back into the SUI ecosystem to boost DeFi yields, to buy back the SUI token, to do things that are value accretive for the SUI network. So we built this out with that thought process in mind, right? Like you can fund free gas forever on SUI without ever worrying about, our validator is going to make money. There's a business model there. Now, if you built a chain that does not allow you to scale horizontally, but requires you to charge higher fees because the network is busy, you're cooked. In our view, right?
Yeah.
That doesn't work. That business model does not work in the long term.
In terms of like the growth that SUI targets and scaling up, there seems to be there's the interest. If there's an AI agent, they want to use SUI, that's the target. I clearly get that. But there's also still the promise that crypto is going to onboard the next billion human users. What is needed for that?
Yeah, so I don't believe crypto is going to onboard the next billion users. I never did. I I think great consumer applications that offer significant value to users will onboard the next billion users to crypto, right? And I think the biggest opportunity is in banking and stablecoins. That's the biggest because they can usurp traditional payment rails. I think you're going to see banks go on chain. The big argument around the market structure bill right now is who's able to pass yields back to consumers. Banks don't want it to go to the exchanges and vice versa. DeFi protocols are laughing like, we don't care. Like, we just want people to be active and pass yield to users. So I believe if banks can build sufficient value, or alternate neobanks can build sufficient value for consumers, you can onboard next billion users easy. Folks like Twitter, can onboard users, or X we call it today. Facebook certainly can do that. So I think it's going to expand with traditional existing businesses or competing game-changing businesses that take an existing business model, reduce the friction, and offer that to consumers in a very palatable and exciting way. So I don't think it's crypto itself. I think it's going to be applications that offer significant consumer value that plug into chains as a delivery mechanism or an execution mechanism to offer that value.
I think it's at the end of the day, if my mom and dad are going to be using an app without knowing that it's crypto, that's when the adoption kicks in.
Absolutely. Like you go on the internet today, you don't think this website is amazing because it's on AWS. Or it's on
Or like, I have no clue what HTTP is. I don't want to know. I just want to use the website, and that's it.
Correct. This is like even in SUI, right? We have something called ZK login, right? We disagree that wallets have to be a thing. It's just a construct that we built because crypto is hard to use. So you can use your Google account to send money on SUI today. You can email money to people and they can claim it without ever having a wallet. You can use an SMS to send money on SUI. You can use any identity you have in Web2 today to send money because that's how the future is going to be. I think users have to sign up for yet another account with yet another password, yet another name. It's just a friction. So we're going to empower existing businesses. You can also use your Facebook account to move money on SUI today without ever knowing you're using SUI. So we are building for a world where every business in the world is going to allow you to move value in one way, shape, or form. I want to be the ledger for that one.
How does that work for the large amount of people that are currently unbanked? What type of impact does this going to bring to their lives?
Well, for them, first and foremost, they're no longer paid to move money, which is largely what they're doing today. Secondly, with DeFi, it's going to offer new ways for them to save, earn, and earn yield that traditionally has probably been afforded to only high net worth individuals. For example, with $3, you're able to earn yield on in DeFi. We're talking about on stable coins, very, very low risk. And other investment strategies. I also think AI is going to play a part there, right? You used to pay for a financial advisor. Well, AI can be a financial advisor now. It's got the same data points. It's got the same regression analysis. It can make good investment decisions for you. So I think the marriage of crypto and AI and the amount of mass automation we're getting, married with like low cost or free pay and stablecoin payment, is only going to be a net positive for those who are unbanked to access capital. On top of that, the fact that the means by which you access capital does not require large technological learnings from a user. Namely, I can use my wallet or my SMS account today to start sending money on SUI. That's also going to be a way to onboard users, right? I think, I remember in Facebook that we had departments dedicated to making the Facebook app as small as possible so that it can come preloaded in some countries or it's a cheap download for those who start using it. We've done that with SUI in a world where you can onboard and start using SUI without ever having to download wallet or to come up with some crazy crypto primitive to make it possible.
If we talk about AI, then I think there's a group of people that are saying, "Hey, it's going to be a big fear, and we're all going to be dead in like 5 years from now." There's a group of people saying, "This is great. Let's continue to build on it, but do it safe." And there's now also a group of people that's saying, "Well, it's taking a lot of compute." And I want to dive in that latter part to understand why this is relevant, because we are all using AWS or whatever other provider there is. But why does compute needs to become decentralized, and what does decentralized mean in that sense?
Yeah, so I mean, my view is a bit different, right? Like if you look at the previous industrial revolution we had, right, there was a fixed amount of people that came into the workforce, right? Like there was a finite amount of people that could have come into the workforce. Now, with this revolution, there's an infinite number of people that can come into the workforce. You look at this morning, A16Z led a funding round for a company who effectively is going to bring in autonomous workforces for those who are doing procurement, right? Imagine the amount of people in procurement businesses today. You can, instead of paying to hire, staff to manage your procurement department, you can pay them to rent their agent that can manage your procurement for you. That's a world we're going towards, where it's mass agentic. I worry about stagflation, but that's a different issue. We can go to that later in that world. But I think it's interesting, right? Like I don't know what the solve is, but I know we navigated it historically before, and I probably want to believe that humans are infinitely smart to solve those problems all over again. That could be my optimism, rather than dealing with the issue or thinking a bit deeper about the problem. But I think AI is a net positive. And I think if you think about the crypto projects who are leaning in, they're leaning in because like anyone in crypto is very forward looking already, right? Like you're very forward looking, so you're very good. You're always going to drive your conversation and drive your thought process towards what is always leaning to the next phase of what people are going to engage with. And SUI is not alone in that. Solana is doing that. Aptos is doing that. Everyone else is doing that because they know it's where the puck is racing. Um, in that world, what happens to the average person working the desk job today? I don't know. I know I probably did not answer your question to a large extent, but it's something we think about a lot in the office today. And even our engineering team, even now with our own engineering team, we're always consistently looking at how do we make one engineer a 10x engineer by using the AI. I like to
Mm-hmm.
think that means we can do more with the same number of people than do less with AI, right? So I think
Yeah.
overall, I'm more of a I am more push the message that it can make us more effective than less.
Before we continue with this episode, this is the chart of Ethereum. And as you can see, there's no return made in Ethereum over the past few years. And that's why we've built MN Fund. MN Fund is actually profiting from volatility. And as you can see, this is the return that we've made in March, which then means that since the entire market has just been going into a bear market and Bitcoin has printed 6 negative months in a row for the second time ever, we are up. We are still in profit and we have been outperforming Bitcoin by more than 55%, in which we are having 3 different strategies within the fund. But recently, we have been shaping it up towards an automatic quant strategy. So instead of having 3 buckets, we have focused a little bit more on the volatility trading, and that's why we have generated such a beautiful return in March. And I think that we can continue to execute that in the coming periods, where instead of seeing volatility as a risk, we now see it as an opportunity. The fact that we're currently up against these market circumstances that we've seen is important for 2 reasons. One, because we are currently up, we can actually benefit from the upcoming uptrending markets more, and we don't need to come to break even again. And secondly, we proved that we can actually limit the drawdown while having directional exposure in the markets. So if you think that you would like to invest into the crypto markets, but you're unsure how to do that, make sure to go to our website for more information or connect with me on LinkedIn. Happy to chat with you. Yeah, I mean, as I said, that's the same as what we do within our companies. The amount of productivity when it comes to hosting a podcast, releasing a podcast, and learning from the way you put it out there with all the data that there is, it's constantly progressing way faster than when we do it just by human beings. But indeed, I wanted to ask you about compute and decentralized compute and why
Let me
you
get
can
to
go back to that.
that's what I forgot. Okay, that's where I lost. Okay. So on the centralized compute. So when we're at Facebook, actually, interestingly, what we believed was companies do not start out to think, all I want to do is take all the user data, monetize the heck out of it, and be a bad actor, right? No company just decides to be evil because they want to be evil, right? Like I actually think what we actually believe happens is because it's very, very hard to orchestrate things on the internet, companies become highly centralized, and because of rules and regulations, they're incentivized to stay centralized. For example, Facebook, as we know, collects a lot of user data and uses that data to generate ads, right? To the benefit of the user. Now, you can argue, there's a lot of rules around Facebook around user protection, data privacy, and everything else that requires them to keep a lot of data in house and not share that externally. We've seen with the Cambridge Analytica fiasco as well. There's no element of trying to keep data in house as a result of that because there's no real effective way to coordinate what people do on the internet in a way that is very, very safe. And people start building these castles, right? So decentralization is the antidote to that. But to do that, you need to be able to do it right? Like, can you make users own their data without ever having, well, where I can own my data and I can lease that to a centralized body and then revoke it whenever I wanted. Interestingly, one of the projects I was looking at Facebook was Trove, called Treasure Trove. I wanted to build a scheme to make it possible for users to own their own data and control their own data, lease it to Facebook, revoke it from Facebook, give it to other platforms. Users become owners of their data rather than centralized platforms. And that's an orchestration problem. And SUI Stack is an orchestrator. It is an orchestrator. It orchestrates data, the ability to store data on chain, the ability to encrypt data and give access to that data autonomously to agents or humans, the ability to encrypt that data and to monetize that data using smart contracts. So decentralization is an antidote to centralization, which of course makes sense, but it's actually less than the meta of just an antidote to centralization. It's an antidote to existing business models, right? Because in the future, users we keep talking about like a universal basic income, basic income, right, that everyone's going to have. But I believe the data you generate in the future will be data you own. How you choose to monetize that data over time will be a choice that you choose to make. But you'll be a central controller of your own destiny online. And I think decentralized platforms are doing that for money right now. And they absolutely will do that for data. And SUI Stack will Walrus let you store data, it lets you encrypt data, it lets you share data, it lets you monetize data, all without trusting a centralized body to do that, right? So I believe most companies, centralized companies, will have new business models with the advent of decentralized infrastructure, and we want to be a part of that.
How do you keep, like, I do understand that if you have your own data and you own your own data, but everything being so decentralized, it's not private. And if we look, for instance, at JP Morgan, they built Kinexys and they use a private blockchain with some sort of shield and then use CCIP to communicate with Ondo. How can we have something that is completely private where we are protected and then interact with other chains within, for instance, SUI?
So, so we're going to be a number of private chains. I've had enough experience with centralized chains for a long time with my work with Oracle and VMware to launch private blockchains, and then jumped over to Facebook to figure out to do it publicly with a consortium model to know that what will happen with centralized chains will be fragmented liquidity, and the competitors we just won't use them. So it just results in the same ACH wire correspondent banking systems we have today. So overall, I'm not bullish on private networks, right? I've seen enough to know it's just not going to work. JP Morgan will have its own chain, Wells Fargo can have its own chain, HSBC can have its own chain. If there's no way to automatically move value across these systems, no one's going to want to use their competitor's chain, quite frankly, right? Beyond that, right, I think decentralized infrastructure is certainly the way to go. You talk about privacy. If you think about SUI today, especially with what we're launching with quantum safe encryption technologies on Walrus, you can store encrypted data on Walrus, fully encrypted, that even a quantum computer is unable to decipher. So just because it's public does not mean it's available to everybody, right? So I think this is where cryptography wins this war, right? Deep tech in cryptography wins this war, where I can have a fully public piece of infrastructure, but in terms of what keeps it private, it's not holding it behind a wall. It's in deep mathematics and cryptography protection, rather than trusting siloed centralized entities to solve the problem for us, right? So that's the way we think it works. On SUI, for example, you're still gonna have private payments also for peer-to-peer. So my balances will be hidden. To have any mass consumer adoption, you cannot have you can't work without privacy. It's just never going to happen. So moving money between my account and yours is going to be fully free, but also it's going to be fully private. But it's on a public piece of infrastructure. It's just cryptography is what protects us. It's not going to be trusting a central entity to keep our data secret. And we're already seeing that those centralized entities generally are unable to keep your data secret long term.
I think in terms of using Web 2 references for that, so it's basically using a public infrastructure, but it's so hard to break through that it's private enough. Correct. And I think one of the other founders, I think it was Costas, was talking about WhatsApp and Facebook. That if we send a WhatsApp message, that it's very hard to crack for anyone to understand what's in that message because we use a certain encryption.
Correct.
Am I right on that, or?
That's correct. That's exactly it. It's exactly it. You trust the math and you don't trust the organization. And that's the way it's going to go. This is why like cryptos is great, right? You trust the protocols, you trust the algorithms, you trust the fact that it's open source so you can read through it and verify yourself, rather than trusting a contract that someone signed with you to say, I promise you keep your data secret, I'm not going to monetize. Only to wake up in the morning and realize it's a data breach and you've lost all your information and someone's sending you a phone call saying your Coinbase account's been hacked, right? So like I think that the mathematical model and a publicly verifiable model is the future rather than centralized bodies keeping the data. So that WhatsApp analogy is absolutely correct. It's a math insecure your data than in the personage of the company behind it than anything else.
But then there's the big fear of quantum compute breaking everything.
Yeah. And we're leading the world in quantum secure algorithms for crypto. So we announced that you're going to do quantum transactions on SUI very soon. We are talking to a number of government agencies and bodies on doing quantum safe transactions. So we not only that, but Walrus is going to have quantum safe encryption as well. So not only can you use traditional encryption mechanisms to secure data, you have to use quantum secure encryption mechanisms to encrypt your most valuable data. Although it's stored on public infrastructure, it's inaccessible by any government or any institution as well.
If I hear you speak, then there's so much happening, and I just wanted to ask you for advice for any day-to-day investor into crypto or any day-to-day user within crypto. How do you keep up with everything that's taking place?
It's very hard, right? Like even if you think about AI, I remember saying to my team, I feel like I'm 2 months behind. I said, don't worry, the tooling's changing on a week-to-week basis, right? Even in AI. I would say the most important thing is you want to look at people that are very augmented towards solving deep problems, because realistically, right, it's if you're just trying to follow the meta on a cadence basis, anybody can do that. But those who had built a very deep team to solve deep problems are the ones to keep track on, because they can be a signal for what is very, very important. Right. That's what we do. We look at the best AI teams that are solving deep AI problems to keep track of what's going on, then all the noise that happens on the internet. In similar way in cryptography, look at those who are publishing the best papers, who are developing and shipping the best technologies, who are opinionated about where the world needs to go from that perspective. Look at the deep problem solvers, and then that'll be the meta for where you should start reading or where you should keep track on.
And if you follow those people, like, where do you see crypto going from here in 2026 and 2027, where we are coming out of a phase where 2024 was a good year, where, for instance, SUI did well too. I think it was one of the key protocols during that year.
Yeah.
But then during December of 2024, we had the hype going into Trump becoming the new president, and then everything went to shit in 2025.
Yeah.
What makes you most exciting going forward in 2026 and 2027?
Well, I was saying with our founders, right? I'm more bullish on crypto than I've ever been historically. I'm more bullish on what we're doing on SUI after leaving Facebook than I ever have been. Because for the first time, all the challenges we had for Libra are really going away. The likes of Strike, Longchain, Tempo is ultra bullish for SUI. Because we've seen this playbook before, right? Namely, what is happening now is the rules around who can what's happening around stablecoins is finally get ratified. The rules around what is foundationally decentralized, sufficiently decentralized infrastructure meaning is finally going to get ratified. So it's going to open up the floodgates for those who want to invest capital in crypto with those guardrails in place. That's never been possible. Also, I think the real problems, which is moving money on the internet, is finally taking center stage. That has always been the goal. That's always been the most important. And we jumped around with meme coins. We jumped around with NFTs. We jumped around all sorts of things for a while. But realistically, they're all a distraction. The real meta is who can move money on the internet faster, cheaper, better than anybody else. And I think that's what we're doing. We will move money faster than every single platform. And Visa taps out at 50,000 transactions per second at peak times. our decentralized infrastructure has no maximum throughput. Even in a current network configuration, it does about 300,000 transactions per second. You double the hardware, you double the throughput. So we already built the infrastructure to handle that agentic world. Also, cost. Moving money should not cost you anything. So we're skating to where the puck needs to be rather than looking and waiting for things to happen. So it was a risky bet that we made, but ultimately it was an educated bet because we had enough to learn with our work at Meta. But really, I think this next cycle is going to really be about those who can move money as efficiently and at scale that the internet needs.
I think it's crypto and AI are both so deflationary for anything that we are going to. Actually, it's true. I mean, it's going to end up that perhaps we're going to have the big boom or the big adoption cycle ahead of us that we might be calling back as the dot-com bubble that we've seen in 2000 from a price perspective, that there's going to be so much hype of all the things that are being built that everybody's like, yes, this is the future. And then you get the upside that we haven't seen. Yeah. Right now, it's just like the sort of boredom state that we're currently in. Thank you very much for your time on the show. It's been delightful to have you on to talk about SUI, but also to talk about your progress and everything that is happening within the crypto space. So is there anything you would like to end off with to anyone that's listening and that's active in the crypto space? And second of that, where can people find you and the other founders on social media?
Yeah, you can find me on X. My username is EMANABIO. Always tweeting about things that's happening in crypto, especially in the SUI ecosystem. My word of advice, and follow SUI, it's a SUI app, SUI network. My word of advice to anyone looking at crypto is look into stable coins. I think the meta for crypto has always been the movement of money, and try not to get distracted with super exciting narratives. It's going to be really, like, crypto does that to you, right? Like, it's really, really about moving money. Like, Facebook was right a long time ago. It's just maybe the meta around Facebook back then was not great. But the ideology of moving money on the internet is the right meta, and look for those who are doing it successfully and doing it at scale.
Wow, that's a good final sentence and statement, I guess. Thank you very much for joining us on the show, and hopefully we'll see you again in a year's time to see how much of a progress we've seen.
I'm sure we'll have lots to talk about then. Thank you.